Well, as expected, Reserve Bank of India has hiked repo rate by 50 basis points to 4.9% in today's policy. This is the second increase by the RBI in repo rate over the last 2 months. Remember, in May, RBI had surprised the market with an off-cycle rate hike of 40 basis points. To this relief of the market, RBI has, however, kept CRR, or the cash reserve ratio, unchanged at 4.5%. CRR is the amount of deposits that banks keep with RBI on a fortnightly basis. On the inflation front, RBI has revised the inflation projection for the current fiscal by 100 basis points from 5.7% earlier to 6.7% now. RBI believes that 75% of this inflation projection, or the rise in inflation, is because of food prices. And therefore, RBI believes that over the next 3 quarters this fiscal, one can expect inflation to remain above the 6% threshold mark. GDP, RBI continues to maintain its GDP forecast at 7.2% for the fiscal year. RBI has also changed its stance from accommodative to withdrawal of accommodation from its loose monetary policy statement. Currently, the surplus of liquidity in the system is only around 5.5 lakh crore rupees, and RBI will continue to withdraw this surplus liquidity in the coming months. So what does today's announcement mean for the market going forward? Well, bond markets have already reacted positively to today's announcement. Economists are penciling in another 35 basis points hike in the August policy, and also RBI will continue to front load rate hikes in the coming months. Post that, bond markets are also pricing in a steeper rate hike before repo rate touches around 6 to 7% mark by March 2023. On other monetary policy announcements are concerned, RBI has allowed cooperative banks to increase their housing loan limits. They've also allowed linking of UPI with credit cards. To begin with, RuPay cards could be linked with UPI for ease of transaction. Well, these are some of the major highlights of the RBI policy. And for more news and updates, you can log on to livemin.com.